Have a really frequently asked question which I usually get from my clients. It says here from Adam, what if the 300k is sitting in an offset account for the prime place of residence, which is the PPOR, but its eventual purpose is for investments? Still okay to claim the interest payments? Great question. Now again, this is not financial advice. It's not me trying to give you tax advice as well. Please speak to an independent financial broker, financial planner, and accountant to go over this. But in answering this question, if I had a client that came to me with that question and I was working with the accountant, this is how I will structure this loan to make it tax deductible. So let's set up the assumption and premise of this question. For example, Adam here, and I'm assuming, I'm just making it up, you have a PPOR, it's worth $1 million in New South Wales, and you have a home loan of 500k, and currently you have an offset account that sits 300k in the offset account, which directly offset this home loan dollar for dollar. Now I'm assuming this is what Adam is asking. Basically, he wants to use his 300k to purchase an investment property. And for example, this investment property that he wants to purchase and been pre-approved for is $1.2 million for the property, and he got an 80% loan to avoid mortgage insurance that is 960k to purchase this property. And let's say to complete this purchase, he needs 20% plus stamp duty, which equals 300k, and the 300k is sitting in his offset account, and he wants to use his 300k to complete this transaction. Now let's talk about the obvious face value of tax deductibility. Now this 80% approval of this, which is 960k, is tax deductible. So 960k is yes, because you're using this loan for investment purposes. Now Adam is asking, what about this 300k, which is offsetting this 500k loan? If he uses this fund, is that tax deductible? Now my immediate answer to you, based on my 15 years of experience, and this is just my opinion and my experience, is no. Because at the end of the day, this home loan is attached to your prime place residence. This purpose is for owner-occupied purposes. So therefore, the interest charged by you pulling this 300k out belongs to the interest repayments of this PPOR, and therefore is not tax deductible, to my knowledge. Now the question you might ask, Adam, is how do you make it tax deductible? Well, this is how I'll structure it. So there's actually two ways to this, and it involves a restructuring of this 500k home loan. So basically what I'll do is I will either have two options. It's either refinance this home loan externally to get a better rate, of course, or if your existing bank is doing a better rate, we'll do an internal refinance. And in terms of the restructuring, I'll get your original 500k limit. I'll split the loan. Your original base loan will be 200k, and I'll split off this 300k. Now I'll tell the bank this 300k is now for investment purposes. Now this becomes an investment vehicle, and then you get your 300k, and then you have an offset account, and you park the 300k in here. And now this 300k is now baptized for investment lending, and therefore all interest charges here will then become tax deductible. Again, not financial advice, but jump in the comments if you have any more questions.